Hello, fellow dividend investors. Happy Monday. It's that dividend guy coming at you with another dividend investing video. So, today we're going to switch up the norm and I'm going to go through the overall portfolio performance, the individual stock performance, and then I'm going to show you the stocks that I selected for 2020 that are strictly going to be the stocks I'm focused on for this year and probably my lifetime. So, generally, they're aristocrats and kings, and there's a reason for that. That's my main strategy is dividend growth. So let's jump right in, and I'll explain the watch list as we go down. So today we are down about $63. For the week we're down 95. For the month we're down 222. The 3-month mark we are up $1,400. For the year, we're up $2,400, and all time since I started investing, since April 13th of 2018. I am up 16.2% with my portfolio. That is phenomenal. And keep in mind, guys, I know I probably say this every video, but this doesn't matter. Like, up until a year, I really don't care. As long as I hit, as long as my all-time and my year are up, I could care less about what I'm doing in the 3-month, month, week, day. It doesn't really matter. That's short-term fluctuation, and that's going to go up and down all the time. So it doesn't affect me. It doesn't bother me. It shouldn't bother you. If you're a newer investor, do not let that get you down. Do not let that get you scared about being in the stock market. It really doesn't mean anything. So let's jump into the individual holdings here. First, we have Altria. It's down 7 cents today. I have 98 shares, about $5,000 of equity in Altria stock. Average cost is $45.30. It's about 30% of the portfolio, which is really high, and I do want to trim that down a bit. So today we're down $686. Total, we're up $560 or 12%. Next, we have one of my personal favorites, Coca-Cola. 56.88 is where it closed at today. We gained about 6 cents. We have 7 shares, about $1,000 of equity. That one's really going to go up. This is going to be one of my bigger positions in the portfolio. Average cost is $51.10. About 5% of the portfolio. Today, we're up about $1.02 or 0.1%. Total return, we're up at $98 or 11.31%. AT&T, this is one of those monsters that just keeps climbing for me. Today we're up about 33 cents a share. We have 62 shares, about $2,400 of equity in the stock. 31.10 is our average cost, and it's about 14% of the portfolio. Today we were up about $20 or almost a percent. Total, we're up 450 or 23.35%. So that's pretty great on one holding. Next, we have AbbVie at $88. Today, AbbVie is down $1.26, which is great. I just wish it would go down more, closer to my average cost. We have 60 shares, about $5,200, almost $5,300 of equity in AbbVie stock. Average cost is $72.22. It's 31% of the portfolio. So that's a really big chunk of the portfolio, and that's a little high for my risk tolerance. Way too exposed to AbbVie in the pharmaceutical sector, and I will talk about that later. So today's return, we are down $75, almost 76, 1.41 in the negative, but total we're up almost $1,000, almost $950 or 21%. Next, we have SKT, Tanger Factory Outlets. I have 5 shares, 76, almost $77. We have 15.29 average cost, about 0.4%, almost 0.5% of diversity in the portfolio. So that is a very, very tiny piece of the portfolio. Today's return, we're negative 20 cents. Total return, we're positive 38 cents. Next, we have Target. We have 10 shares of Target. It went up 60 cents. We have about $1,200 in the stock in equity. We have $87.68 as our average cost. About 7% of the portfolio is in Target stock. We are up $6 today, up almost $300 total. Next, we have ExxonMobil. $68.56 is where it closed at, negative 26 cents. We have 29 shares, almost $2,000 in equity. $73.50 is our average cost. About 12% of the portfolio is in ExxonMobil stock. Today we lost $7.54 or 0.3%. Total, we've lost $143 or 6.72% in the negative. Next, we have Walgreens. We only have 1 share. We closed at $54.39 today, lost about 3 cents. We have 1 share. $54.39 is our equity. $54.60 is our average cost, so we're down a bit. 0.3% of the portfolio is in Walgreens stock. Today, we're down 3 cents. Total, we're down 21 cents. Not a huge deal. Not worried about it. So, as you can see with Altria and AbbVie, so Altria is about 30% of the portfolio, and then AbbVie is 30% of the portfolio, so 60% of my net worth in the stock market is between two stocks. That is way too high for me. So what we're going to do is I'm going to go down our watch list, and I'll kind of break down each individual pick that I've chosen. I'll try to keep it pretty quick on each one, unless it's a big favorite, and then sorry if I rant. But I'm gonna kind of expand my wealth by adding new positions and adding to smaller ones. So I will be adding to Walgreens and a Tanger Factory outlet. But aside from dividend reinvesting, if the stock's at a good price, I will not be reinvesting into Altria or AT&T or AbbVie. I do love those stocks, but as you saw in the portfolio diversification section, I am way too exposed to AbbVie and Altria. So as far as dividend reinvesting goes, if they're at a good price, I will do it because I am a fan of those stocks and I do like the cash flow that they bring in, but I don't want to boost them up so far that my portfolio is just those two holdings, and that's pretty much what it is right now. So instead of selling off those great positions because I'm a fan of both of those stocks, I'm just going to add to my current positions and or add to stocks on my watch list. So let's jump right into the watch list real quick and see what I might be putting my reinvested money into for options for dividend reinvestment outside of my current portfolio. First, we have Realty Income. This one is one that I've heard a lot of in the comments. We've talked about it I've talked about it with various people, fans of it. I know this is one of the biggest stocks that retirees own in their portfolio because it operates as a monthly dividend payer. So if you own Realty Income, you can get, I think it's 22.7 cents a share every single month. So it's like a paycheck almost. It's pretty much guaranteed income, just like you would get from a job, except you only get paid once from Realty Income instead of twice like you do at a job. But if a lot of your net worth is in this stock, you can get paid monthly. And this is one of the only monthly stock that has a great track record for dividends. So it's paid a dividend and increased it for 25 years. So that's phenomenal growth. And so that makes me a lot more comfortable because a lot of the other monthly stocks I've looked into don't have that track record. So Realty Income is one of my favorites, my favorite monthly stock, and I will have a decent percentage of my net worth in this stock. So it comes out to be, if there's 25 holdings, I'll have about 4% because 25 times 4 is 100, right? So if each individual holding has 4%, that would make it all equal. And that sounds good on paper, but I favorite some stocks more than others. This would be one of the ones that would probably have more of like a 7 to 10% of the portfolio. Next, we have Genuine Parts. They are a dividend king. This is a great way to play the auto market without having to own a car manufacturer. I cannot tell you how bad Ford and GM have been performing since Tesla came into the picture. The manufacturers are really struggling right now. They have a lot of free cash like sitting on the balance sheet, but like they don't produce enough, or like the car production's going way down. So they're inconsistent. They aren't producing as much as they should. It's just a wreck. So Genuine Parts actually produces parts for used cars. And honestly, my generation, millennials, control most of the market, right? So like we in Gen X are going to be the ones that are going to be buying cars for the first time, mostly used. My generation, or I personally, don't see the point in buying a brand new car because when you drive it off the lot, it loses like 25 to 35% of its value, I believe. And that's a lot to lose right off the bat, but then it just keeps deteriorating. And the price that you pay, I don't think is worth it. So I've bought nothing but used cars. I've had great luck with them. I'd rather put $1,000 in a used car than spend $50,000 on a car. You know, it just my generation doesn't have that kind of money, right? We really just don't. So frugal, we live pretty frugally, and expensive purchases aren't generally used on cars. So this is my play on the car market. I feel like it's way safer than any of the car manufacturers aside from Tesla if you're a growth investor, but they don't pay a dividend, so they're not in my portfolio. So they are my play on the car market. They have, or on the car manufacturing space, they have paid a dividend for 50 plus years, and that's why I think they're a great play. They're a lot safer than Ford, who's cut their dividend. They've paid a lot better and more dependable dividend payouts than GM. And so that's why I chose them over any car manufacturer. I think this is the only way I would be comfortable getting exposure to that market. Next, we have FRT. I have owned them in the past. They are a real estate investment trust, and what makes them, as you can see, I own 15 shares. What makes them so special is they are the only dividend king on the market for REITs. It's just them. So they own and manage high quality retail focused properties. So I know retail's kind of dying, is what they say, but they have a great track record of finding very good tenants, and their leases are phenomenal. So just I didn't go into but very deep, but they have great leases as well. So SKT, and FRT are my main real estate plays. I might get a data center later on as I keep investing, but for now this is going to be my main focus. So they are a dividend king, so they've increased their dividends for 50 plus years, and I'm happy to own them. Dividend kings are my cream of the crop. They are the top level stock that I can hope to purchase because they are exactly what I want. They are dividend growth. So as long as I hold them, if they have that type of track record, I'm very confident that they'll keep that label on them, because most of the time stocks, I mean, they if they return money to shareholders like that consistently and keep increasing it, they're what I want in my portfolio. So FRT fits the bill. Next, we have PepsiCo, and I know I'm super, super bullish on Coca-Cola. That is because I am brand loyal to Coca-Cola, but when it comes to taste, I'm a Coca-Cola guy. When it comes to the stock, I'm actually a Pepsi guy. So I know it's weird, they're competitors, but let me explain why. I like Coca-Cola, but I also like Dr. Pepper, and I also like Mountain Dew. Those are my three favorites. And so I don't own Dr. Pepper, but I do want to own Mountain Dew. And I think Pepsi is a great brand as well. They also own Frito-Lay, which is Lay's potato chips, which the vast array of that product, as well as Quaker. So they own Quaker products as well. And most of the time when you go to vending machines, like, they own almost everything in that vending machine. So they have they're very diversified in the snack food space as well as the beverage space. So they're not just a pure beverage play like Coca-Cola is. They are diversified within the sector as well. So, and they are very close to dividend king status. This is one of the exceptions that I made for the portfolio, just like Walgreens. They're really close. Both of them, I think, are like 47 or 48 years of paying increasing straight dividends. So they're very close. And so that's why I want to make the exception, because they're a great company. So PepsiCo is definitely going to be one of the bigger ones in the portfolio. I wouldn't be surprised if I had 10% in Coke, 10% in Pepsi. When it comes to dividends versus the price, I think Coke is a better play. But when it comes to, I think, the profitability of the company and the safety of the dividend, I think Pepsi is actually safer than Coke. Next, we have Kimberly-Clark. These are one of those household products. They make toilet paper, tampons, tissue paper. They're so diversified. They're a paper company. I think if let me see. Yeah, operates through the following: personal care, consumer tissue. Yeah, so they make paper products. You use them every day, even if you don't know that you're using them. They are dividend king, and that's why I want them in my portfolio. Again, they're the cream of the crop, tip top of dividend stocks. And so they will be a decent position in my portfolio. I do have a lot of stocks, dividend kings paying me in January, or set to pay me in January, and so that might make it a little tougher. But honestly, I think that Kimberly Clark would probably be right below Pepsi for me. So I'll figure out the percentages and stuff like that when I get them figured out for you guys to see exactly where I want the end goal to be. I haven't figured that out yet. I just really just kind of hammered in the watch list this week. So Kimberly-Clark will be a moderately big position. Next, we have Illinois Toolworks. I think this is a great stock because it's kind of got a trade-like quality to it. So they produce like welding materials, HVAC, plumbing, which are always going to be needed, right? People are always going to need pipes taken care of, electric taken care of in their houses. So this is one of those timeless things that kind of goes with real estate. As long as they're building houses and people need duct work done and air conditioning, stuff like that, I think it's a great play. They are a dividend king. They've been on my watch list for a very long time. I'm a huge fan of this stock. And they too are a dividend king. They will probably be a little bit lower on the totem pole than a Pepsi or a Kimberly-Clark, but I do want a decent size. They're probably going to be like an 8%. Next, we just got to February, by the way, so that was the end of January. This is February. Starbucks. So they are one of the only stocks that I picked that is not an aristocrat or a king, and here's why. So Starbucks doesn't have the longevity of paying, like say a Pepsi or a Coca-Cola does, where they are or almost, excuse me, a dividend king. They have a phenomenal track record of double-digit dividend growth. So they do like a 10 to 12% raise every year. And I'm willing to sacrifice the longevity of the dividend to get one that grows at a faster rate, right? So this is as close to a growth stock in my portfolio as you're going to see because they grow the dividend so well that I'm willing to sacrifice some of that consistency and dependability because of the growth. I literally have a Starbucks that just got put up right next to my mom's place down the street, next to an Arby's and a Domino's. So they're literally getting to the point that they're like McDonald's, where they're on like every single street corner. They've been around for a long time. A lot of people go there. They're super popular. I'm not really a coffee fan, but I can tell where the money is, and it's definitely in Starbucks stock. So I'm a fan of the growth and the potential of the dividend. So it will be it's going to be a smaller position in my portfolio overall, just because I already have so much in the beverage space with Pepsi and Coca-Cola. But I do see the strength and the powerhouse that Starbucks is, and I do want some of that exposure in my portfolio. Next, we have Lowe's Home Improvement. Love this. So this is another kind of play on real estate, home improvement stores. Big retailers, I know they're kind of being shunned and kind of forsaken with the Amazon apocalypse, but Home Depot and Lowe's have done very well. And the reason I chose Lowe's over Home Depot is Lowe's has actually paid, and here's the kicker, increased their dividend every single year that they've been on the stock market. That's the type of consistency that this portfolio needs, that I look for. So when it comes to stocks in this bracket, Lowe's is going to be the second or third biggest biggest position in this portfolio for that set of months. So this is one of those that I'm going to hold for life, and I'm not going to worry about it. I'm going to set it and forget it, and just turn drip on and just keep growing it. Next, this is actually going to be the biggest spot for this set. Procter Gamble. They have so many products. It's ridiculous. Like if you look in your bathroom, you are going to find probably 10 to 12 products that are Procter Gamble. Plus, they make skincare stuff. They make kitchen stuff. It's just they're everywhere. So this is one of those products, or one of those companies that make products for everything, everywhere. You really can't just escape them, and you use them without knowing it. Just like Kimberly Clark, they're probably a staple in your household, even if you don't know it. So this is going to be the biggest position for February in the portfolio, because they're so consistent and they're so diversified that I wouldn't mind if I had to pick a stock for February, Procter & Gamble would be it. I know I'm not invested in them, but that's just because I thought that they were a bit overpriced, and I still think they are. They're close to their 52-week high, but I'm willing to take that sacrifice. So that's the thing, is when I really like a stock, I wait on it and I see where I can get it at different prices. But this is one of those that I'm kind of just like swallow the pride and just buy it, and I'll buy it for the rest of my life. Next, American Express. This is the only banking stock I want. So I've looked into Visa, looked into MasterCard. I know they dominate the market, but I kind of like the underdog. So I like American Express. It's a big Buffett stock. This is a great exposure to automatic transactions, as in debit cards and banking. So I don't want to hold a bank, because since the bailout, it's made me really uncomfortable holding a bank. I tried to own like Wells Fargo or JP Morgan Chase, and I know they're great companies. It's just with the history that I've had, and my generation saw it, I don't want to hold a bank. So American Express is as close as we're going to get. I love them. I actually own Visa, but Visa's dividend's really tiny. So compared to the price that you pay, American Express is actually a better dividend. I know that Visa grows it faster, and I believe MasterCard does as well. But it'll take a while for them to get to the point that American Express is at. So that's why I chose American Express over those two. But yep, so this will be a smaller position, but I'm still excited to own it. Next, I believe this is 36912, American States Water. Everybody uses water. American States Water provides water to, I believe they said 40 out of the 50 states in America. So for 36912, this will be one of the biggest positions that I possibly have, that I can possibly get because of that fact. everybody needs water. It's a no-brainer. It's one of those things that you naturally need, and you don't have a choice about it, and you're gonna have to pay them regardless. It's like your electric bill. You got to pay for your water. So this one's a no-brainer. Followed by the next one, which is a no-brainer, and this will probably be the second or third biggest position: waste management. I love, love, love waste management. This is actually probably going to be the second stock, second biggest position for 36912. Waste management is one of my favorite stocks because, again, just like American States Water, they provide a service that you don't have a choice. They are going to do it regardless, right? They pick up your trash, which we take for granted so much, but it's one of those things that's automatic, right? You got to pay for it. The city makes you pay for it. They have kind of a monopoly. They're in a very impenetrable industry, and they are the big dog. So, love Waste Management. It's one of my favorite companies, probably in my top 5 all-time companies. So they're a no-brainer, and I love them. So next we have IBM. They are a dividend aristocrat. Oh, sorry. American States Water is also a king, and I believe Waste Management is getting close to an aristocrat. But IBM, I believe, hit the dividend aristocrat list last year when they increased their dividend. But they are the only tech company that I have, and it's because Big Blue pays a great dividend. They have a great track record of raising their dividend, and it's huge. Compare it to Microsoft and Apple. The growth isn't really there for IBM. I know it's been kind of stagnant, even fallen, I believe. Yeah, fallen over the past 5 years. So long term, they haven't done great. But I really don't care because they pay such a good dividend. And if I lose on one company out of 25, I really don't care. So they have great cash flow. They cover their dividend. And I believe they hit dividend aristocrat status. So this is the only technology company that I have. They do cloud. They do microchips. They do a bunch of stuff. So I like IBM. I like Big Blue. And so they will be they'll be a medium position for this set of months. Next, we have Travelers. Again, just like IBM, this will be a medium position. I wanted a little exposure to the insurance side of things in that sector because everybody needs it. So regardless of age or whatever, you have insurance on your kids, on your house, your mortgage, your boat, whatever you need, your car. Everybody needs insurance. And when it comes to paying the dividends, I like their growth rate better, and I like their consistency better. Aflac's really good, but Travelers pays about the same, and their payout ratio is healthier. So that's the only reason I chose Travelers, because it just looked like a better deal to me. Next, we have Johnson & Johnson. This is the single biggest position that I want to have in my portfolio for this set of months. So they are my favorite stock ever. Like, I haven't owned them because I felt that they were pricey, and I couldn't get in at a good price. But just like I said with Procter Gamble, I'm probably just going to bite the bullet and buy them eventually. Just say screw it and make them a huge position. I'm a huge fan of them because they are super diversified in the healthcare sector. They are so big that they've gotten sued like 3 times and they don't care for like asbestos and for baby powder or whatever. I read all about it. But I like them. They're huge. They're a juggernaut. And they're a household name. So, and they're dividend king on top of everything else. So they will be the biggest stock in this set of months because they're definitely one of my favorites. Next is 3M. Just like Johnson & Johnson, they are a dividend king, and they actually pay a better dividend than Johnson & Johnson does as well. They are very diversified. It's funny that they only have a 5% buy rating. That's ridiculous in my opinion. But they operate in 5 different segments. So they have industrial, safety and graphics, healthcare, electronic, and energy, and consumer. So they are very diversified. They have so many products, I can't name them all. Like, it's like a bunch of weird stuff that you wouldn't guess either. It's like Post-it notes. They supply earplugs to like assembly line companies. If you go to like Walmart or Menards, more specifically, if you go to the painting section, they have a bunch of stuff, light bulbs. Like, they've got such a diverse portfolio of products. You can't really go wrong with 3M. And they are a dividend king as well. So it's just one of those big staples that I want in my portfolio. They and Johnson & Johnson are going to be pretty big positions in the portfolio over time. And then we have, last but not least, the 25th stock in the portfolio, Mickey D's. I know I talked about them with Starbucks. They are the pinnacle of fast food. Regardless of the economy, I think they'll do phenomenal. When the economy's down, people want cheaper food, so they go to Mickey D's. Don't they're on like every street corner. Their jingles are stuck in every kid's head. They're ingrained in our memory from the time we're like 3 years old. Like they're just unstoppable. Really, they're an iffy company, honestly, but I eat there all the time. Honestly, with the bill that I have for McDonald's and my on my bank statement, I should just probably own the company. Um, I could have probably bought a few shares of Mickey D's with how much I eat there. So I believe they're an aristocrat. I know that they just did a pretty big dividend increase, and I will be happy to own them. So that's the watch list. If I had to tell you guys kind of what the top like 3 stocks are going to be for each set, I would say Coca-Cola, Pepsi, and Kimberly-Clark. For 2, it would definitely be AT&T, then Lowe's, and then Procter and Gamble, and then Lowe's. And then for 3, I do really like Target, but honestly, it's probably going to be Johnson & Johnson, Waste Management, and McDonald's, just because they're such good companies. So there you go, guys. Overall portfolio, you got the individual stock breakdown performance and my new watch list that is going to be clear cut and stay for 2020. Hopefully you guys enjoyed it. Sorry, I know the video is a little longer than normal, but I wanted to go through each individual stock, why I picked them and whatnot. So you guys kind of got more in depth of how I was thinking about picking the stocks. But 2020 is going to be a great year for us, guys. We're going to have probably, my goal is like a 24K portfolio. That's a little high. I might get closer to like 22, but I'm going to keep reinvesting dividends. I'm going to start adding money as of next month, and we're going to hit the ground running. So thank you so much for watching. I've been getting subscribers even on the weekends when I don't post a video, so it's phenomenal just to see the growth of the channel. Remember to hit the subscribe button for that dividend guy, and when you do, hit the notification bell so you don't miss any videos. I post a portfolio update, an individual stock analysis every single day of the week, Monday through Friday, every work day. So I've been keeping it pretty consistent since, I think, October, and I'm going to keep it that way. So thank you guys so much for watching. Remember to hit the like button, show appreciation for me going through all that, and hit the subscribe button so you don't miss any content. I will see you guys tomorrow. Happy Monday. I hope you guys had a phenomenal day, and I'll see you next time. Take care.